Hello, my name is Robert Goodwin, and this is Law on the Line. My guest for this session is E. Martin Davidoff. Marty is a CPA and tax attorney practicing in Dayton, New Jersey. Welcome aboard to Law on the Line, Marty.
Thank you very much.
And our topic today is how to deal with the IRS, and I guess that's an issue that strikes terror in all of us as to the fact that we all have to deal with the IRS at some point in our lives every year.
Yeah, especially when they get that notice of intent to levy or something in the mail, that certified letter. That's what scares us.
That's what scares us all. And you've been doing this for specializing in tax issues for about 35 years.
Absolutely.
So you're an ideal guest to talk about how to deal. And in your firm, I understand you were telling me you have enrolled agents, you have CPAs, and you have staff attorneys as well.
Absolutely.
All right. So let's start off. What are our strategies? What are the 3 keys to success in dealing with IRS collection matters?
Well, you get the scary notice. You get basically a notice, intent to seize your property and your rights to the property, a notice of intent to levy and your rights to a hearing. So you got to consider, do I take the hearing? And then how do you deal with the IRS officials? Now, it's really pretty simple. If you're doing 3 things, you can deal with almost any IRS issue that you have when you owe money. The first thing is keep current on your taxes, all right?
Okay.
Pay 2018. If you owe for 2014, 15, and 16, and you keep trying to pay the back years, then you're going to owe for 18. And then if you owe for 18, you're going to have penalties and interest on top of it. The IRS actually wants you to keep current first. So people get the impression they have to pay the back debt. Somebody calls from the IRS to say, pay me the money. And they start paying them the money. And then in April of 19, they're going to owe money on 18. Then any installment agreement they have is going to be defaulted. So the first thing is keep current. The second issue, if you owe more than $50,000, you have to provide full financial disclosure.
More than 50.
More than 50.
Mm-hmm.
You have to provide full financial disclosure. They have a series of forms 433 that allow you to make that financial disclosure. And if you owe less than 50 and don't think you can pay them, you say, listen, I have a tough situation financially. I can keep current, but I can't pay them any of the back taxes. You'll also have to provide financial disclosure. So that's the second key, provide financial disclosure.
And is that a form that you mentioned the particular
There are
form?
forms. There's a form 433F for smaller individuals, a form 433A, and a form 433A OIC if you want to do an offer and compromise. So the second thing is provide financial disclosure. And the third thing is make a proposal.
To the IRS?
Yeah. Too many people, they say, okay, I'm keeping current, and I gave them the financial information, and the IRS said they want to levy me. I said, did you tell them you wanted to make an installment agreement? Did you say I want to pay this over 5 years, 3 years, 2 years, or put me in uncollectible status? Because once you make that proposal, if they say no, you have the right to appeal that proposal.
And that would be a right of appeal within the IRS itself?
Within the IRS itself.
I see.
So to sum, 3 things. Keep current. If you're required, make full financial disclosure. All right. And 3, tell them what you want to do.
So what would trigger that ominous letter that you receive in the mail? Clearly if you don't file, I guess that's a separate issue, but if you're self-employed, for example, or you didn't properly, or you overclaimed deductions, is there a threshold dollar amount?
There's the letter in the IRS will be if you owe money, but you hit a couple of good points here, okay? So how will you owe money? Well, if you don't file returns, the IRS will start sending you notice saying, we're going to file a return for you. It's called a substitute for return. They're going to take all the matching information that they have, all the 1099s that you might have gotten if you worked as an independent contractor, interest, dividends, stock transactions. They're going to take that and they're going to assume, by the way, if you have stock transactions, they're going to assume that you have a 0 cost in those, so they're going to assume it's a gain even if it was a loss. So they're going to take all these transactions, put them together, and prepare what they call a substitute for return. They then send you a notice, all right? They give you time to respond to it. If you don't respond, they then send you something called a notice of deficiency. And the notice of deficiency is your right to go to tax court. So you go to tax court, and if you don't...
Is that a federal tax court?
Federal tax court.
Mm-hmm.
And if you don't go to the federal tax court, you just ignore the notices, all right? That becomes an assessor. Now you owe the tax. So there's a lot to go to even you owing the tax when you don't know you owe the tax.
Now, how many people have or where the IRS files a substituted return. Is that something that's very commonplace, or is that a rare instance?
It's not rare, because we see, in our little office, we see dozens a year. I suspect it's hundreds of thousands, if not millions, of substitute for returns. And that's just one way to get to the assessment. So you get to the assessment, then they send you letters collecting. They say, okay, now pay us. Then you have to engage with the IRS to figure paying. The other way it comes is you file returns, and you owe money when you file them. That's another way you're going to owe money. The third way is you file your return, and the IRS says, wait a second, you didn't report this pension distribution. And they send you a form that basically says, listen, it's called a CP 2000 form. It's a form that says, we think you owe some money. And if you don't respond to that, they go through they give you an assessment, a proposed assessment, they give you a notice of deficiency, you get an assessment, then you're back into the collection side of the IRS. And once you're in the collection side, so there are three ways to get there. One is they file a return for you. Two, you file a return for yourself saying you owe money. And three, they make an adjustment to your return through either through the CP 2000 notice or an audit. Maybe there's an audit. And they make an adjustment for you. So those are three ways that you can end up owing money to the IRS and then have to go back to, dealing with the collection side.
So you hear that the IRS is understaffed, perhaps, and audits are less frequent than they had been in the past. But this methodology that you describe seems to indicate that the IRS really focuses on and is successful in finding those people that do not file.
Absolutely, and a lot of it is automated. So even though the in-person audits are being reduced, the correspondence audit, the substitute for return issues, the non-filers, the matching notices, the CP2000, those are increasing because they're investing in technology in order to get more collections.
So Big Brother is watching us and making sure that we pay our taxes.
Well, they're doing their job, which is to do exactly, and that's with a reduced budget of down many millions of dollars over the last 7 years. Their budget has been decimated.
So when you get that ominous letter, how quickly does a party have to react to it? What is the time frames? Well,
you have to see, that's the second part. Part of the keys of success with the IRS is to carefully read and understand the communication. They usually tell you right in the communication how long. It might be 30 days, it might be 45 days, it might be 15 days. So you need to read the communication very carefully. And almost all of them give you some sort of appeal rights. So the key is to read the communication and engage by just taking it. I have people come in with piles this high of unopened IRS mail, literally this high. And I just go through it, and they just can't deal with it. So especially people who have owed money for many years, they just get to a point where they just can't deal with it.
And so you always seemingly, and when you get a notice from the IRS or there is a name of a representative, usually in the upper right-hand corner, usually, at least the forms that I've seen over the years. Who is that person that's assigned to a case, and what is your role in engaging with that person?
Well, with the reduced IRS budget, that person's name in the upper right-hand corner, whether that be a revenue officer who handles collections or a revenue agent who handles audits, that's becoming fewer and fewer because of the IRS budget. Overwhelmingly, most of these notices are coming from the centralized facilities, and there is no name of a person to contact. There's an 800 number. It's called the Automated Collection Service. So there's an 800 number to call. If you get a local person, that's easier because you can engage with them and talk to them. They're there. But the 800 numbers are tougher. You have to sometimes wait on hold an hour, 2 hours. They open at 8 a.m., so I suggest people, if they want to talk to the IRS, get on the queue about 7:45 in the morning so that you don't have to wait as long. Or get in the quick queue in the middle of the week, not the beginning of the week. Or maybe late Friday afternoon sometimes, everybody's away in the summer, but there are some people working for the IRS there, so you call that. So more and more, you're dealing with a large bureaucracy of a telephone room that has hundreds of people sitting in there, and you're speaking to one of those persons who have been trained there to figure out how to maximize how much money to collect from you, and yet protect your rights if they're doing their job correctly.
Okay, so I know that there are tiers of debt. And, for example, I find myself in a position, hypothetically, I owe less than $50,000 to the IRS over the last 3 or 4 years. And is there a statute of limitations going backwards? You hear 3 years, the IRS cannot claim. Let's deal with that issue. Is there any kind of waiver or claim of that bars the IRS from seeking back taxes?
Well, if you don't file a return, the IRS can seek back taxes at any time. Generally, they don't go back more than 6 years.
More than 6.
Just
okay.
As far as collections, though, if you owe taxes, there is a 10-year statute of limitations. They go right to the end of the 10-year statute of limitations, and sometimes at the end of 10 years, they will move to put a judgment on you. That's very rare to put the judgment, but generally it's a 10-year statute of collections.
Okay, now I owe less than $50,000.
You owe less than $50,000. And there are options, very easy options. If you owe less than $50,000, the first option is you can go online and do an online payment agreement. All right, you can say, okay, I can pay that in 72 months. They give you up to 6 years. So if you owed $30,000, that might be $500 a month for 72 months, if you had the interest and everything.
Right, and there is a legal rate of interest that is applied?
Yeah, the legal rate right now is 4%. There's also a late payment penalty of another 0.5% per month, but the legal rate is 4%, and it varies based upon the prime. But you can fill out Form 9465 and use that to request a payment agreement if you're under $50,000. And you just take the amount you owe divided by 72. And it's a direct debit, so you have to do a direct debit from your bank account, and they will approve that without you providing any financial information. Often the IRS will call up and say, "Pay me now," but you say, "Well, can I pay that over 6 years?" And if you owe less than $50,000, and you have at least 6 years to pay, in other words, the statute of limitations isn't running close, right? You can pay it over 6 years in equal payments. So no financial disclosure. Now, if you owe under $50,000, other things are
over 50. You said?
If you still owe under 50,
under, okay.
You have options. What if you can't pay? Well, you can provide financial disclosure to the IRS and say, "I can't pay. Please put me in your category called currently not collectible." And they won't bother you for a year or two, and then they may come back to you and say, "Would you update your financials and let us know if you can pay?" The third thing you can do, and this is and you can do that at any level, no matter what you owe. And the third thing you can do at any level, you can ask for an offer in compromise. You say, "Listen, I'm never going to be able to pay you." All right? And the offer in compromise, we can talk another whole half an hour just on that.
Explain that. What is an offer in compromise? I owe $50,000, Martin, and I just can't pay it. I want an offer in compromise.
Okay.
What is that?
So an offer in compromise where you go to the IRS and say, "Listen, my reasonable collection potential," and that's a term of art.
Reasonable
collection potential, and that's
okay.
that's a term of art, and I'll explain it in a minute. My reasonable collection potential is less than $50,000. Is less than $50,000. Let's say I say it's only $2,000. I want to give you $2,000 toward the $50,000 I owe, and then they say, "Good, provide us financial disclosure that you can only pay us $2,000." And the way you do that, you fill out a more intensive Form 433. It's a Form 33A parentheses OIC.
OIC.
Yep. And they look at two things. They say, what are your gross assets? All right. So if you don't own a home, you don't have any paid up life insurance, cash value of your life insurance, you don't have brokerage, you don't have anything there, that's going to be a zero. Then they're going to look at, well, what do you make each month? So let's say you're making enough to pay your reasonable expenses, but you have an extra $1,000 a month. They're going to say, we're not going to take that offer. An extra $1,000 a month between now and when the statute runs, you're going to be able to fully pay us. But let's say you're running break even. You're making $100 extra a month or close to break even. They're going to say, okay, that 100 over the life of the statute, 100 months, is only $10,000. That's not going to pay us off. Take that $100, multiply it by 12. That's $1,200. You have no assets. Pay us $1,200. We'll take that as an offer. And that's an extreme situation, but for people who are, do not have excess money. Now, in coming to your budget, they have collection financial standards, which you can find on the irs.gov website.
Collection financial standards.
Right.
Okay.
And if you go to www.irs.gov, they actually have an offer and compromise calculator where you can put in all your data, and they'll tell you whether or not you qualify.
For an offer, and how much the monthly payment
and
would be?
how much the payment would be for it. Usually the offer is a lump sum payment. You can do a monthly, but I recommend it to people. But you can go to the OIC calculator on www.irs.gov, Just type in offer and compromise calculator, and you can put in your numbers, and they'll tell you whether or not you would qualify. Now, it's not a seasoned veteran looking through in detail, but it's a quick and dirty. It works.
I'm concerned about the statute of limitations, 10 years going back with an offer and compromise. You said something earlier about you're nearing that statute. How does the IRS deal with when you're getting to that 10-year threshold?
Well, sometimes they refer it out to private debt collection if they don't think there's a lot of potential. But in the offer and compromise, one thing about the offer and compromise, it stalls the statute. It's no longer running. So one of the things, if you do an offer and compromise, you're basically telling the IRS, we're going to give you more time to collect the tax. Because while they're considering the offer, the statute has stayed.
It stayed,
and
then it can renew itself. But it's to the benefit of the IRS to,
yes.
Obviously, to say
so
that
if they're considering your offer for a year, which is an average offer, takes about a year. If they're considering your offer for a year, well, instead of 10 years, they now have 11 years.
And do they recalculate into the offer, or calculate into the offer, the legal rate of interest to be applied?
They don't really calculate that, because what's happening is whatever you owe, it doesn't matter what you owe. You could owe $100,000, you could owe $1 million, you could owe $50,000. They're looking at what you can pay.
I see.
So if the reasonable collection potential is $5,000, you could owe any number, and it will normally take the reasonable collection potential.
Now, that's under 50, or 50 and under. I owe between 50 and 100. I believe that's another category. What happens then?
So the thing about offers and compromise and currently not collectible apply to any amount you owe. So you can do that for no matter what number you owe.
I see.
The installment agreements are different based upon what you owe. So under $50,000, you can do an installment agreement, 72 months, no financial disclosure, and no lien if you do a direct debit. So that's the under 50.
No lien on your property.
If you're under 50. From 50 to 100, you can call the IRS, no financial disclosure, and pay within 84 months. They give you 84 months to pay, but they have to consider a lien. So when they do this, you ask for that, you submit your paperwork, and they have to consider a lien. So you will usually file a notice of federal tax lien against you.
And that would be against real estate that you own? Is that what the lien is?
It's against real estate you own. It's actually a lien, a public lien on you, but it will affect your transfer of real estate. It may affect the transfer of other properties, but I'm not 100% sure what other, but real estate for sure.
And is there any different criteria or standards applied if the debt exceeds $100,000?
If it's under $100,000, you always must provide financial disclosure, and they also still consider the lien option.
And you still have an offer and compromise opportunity?
You still have offer and compromise, currently not collectible. You have all those opportunities.
And how many months? 84 again?
Generally, whatever number you can do. Interestingly enough, there's a provision called the 6-year rule. Did you have a brother or sister?
I do.
Okay, you know what shotgun means?
I think so.
Yeah, you get the front seat. All you had to do is say it. So with the IRS, when you make disclosure, let's say you owe over $100,000, and you make disclosure. Let's say you owe $150,000, all right? And you make disclosure, and they say, boy, you can pay me $6,000 a month, all right? Now, $6,000 a month, 50 months, that's going to get paid like in 25 months,
right?
2 years. And I go to the IRS and I say 6-year rule, and that's like shotgun. Okay, you don't have to pay at $5,000 a month or $6,000 a month, as I said earlier. You can pay it over 72 months.
Or $2,000 a month, approximately.
Right, $2,000 a month, and in fact, you can do it $500 a month for the first year, $1,500 a month the second year, $2,500 for years 3 through 6. So you can have variable steps on that. But the 6-year rule basically says, even though you, IRS, think I can pay more, all right, I'd like to pay it a little slower. And under the 6-year rule, and it's right on their website, under the 6-year rule, you're going to allow me to pay over 6 years, almost no matter what.
And that's something you need to be aware of going in.
You need to be aware. They do not offer it to you. They will not offer it to you. They'll just say, oh, you can pay $6,000. No, you need to exercise. That's why the best advice is, even if you have to go for a consultation, even if you can't afford a tax attorney, spend the money on a consultation and say, what should I do? Here's my circumstances. It's like going to a doctor for a diagnosis. Mm-hmm. You don't have to hire the doctor to do the surgery, but hire him to do the diagnosis. Go for an office visit. And that's what I suggest.
But as a tax attorney and with the persons that are enrolled agents working for you, what specifically, so our audience understands the added value of hiring the professional as opposed to just going on a website? You mentioned one thing, knowing about the 6-year rule,
Right.
for example.
Well, just knowing people, when they're in this situation, first of all, we haven't even gone into the appeal rights, okay?
Into appeal rights.
Appeal
That's
rights.
correct.
They don't know what their appeal rights are. They don't know the rules, all right? And in a simple 1 and 1.5 hour consultation, a seasoned tax professional can diagnose the problem, type it up, print it off, and say, here's what you do. And then the taxpayer can make what is called a make or buy decision. They can do it themselves, or they can say, well, I'd like to hire you, Mr. Lawyer, to do this. And so that's the make or buy decision that people can make. But they should at least go. And the CPAs who do a lot of work so they can go to enrolled agents who do a lot of representation work, CPAs who do a lot of representation work, or attorneys. Now, not everybody who's an attorney or CPA or an enrolled agent does the representation work. So say, how many cases do you do a year doing representation? And those who do a lot, who are doing 30, 40, 50 or more, those are the ones that you should go to, and they'll give you the rules.
And where does the enrolled agent or the CPA meet the IRS representative? And who is the representative provided by the IRS when you're trying to make these deals, so to speak?
They're dealing with the same people you would be dealing with. They're dealing with the revenue officer who's local, the revenue agent. They're dealing with the 800 number. We spend a lot of time on the 800 number phone. The taxpayer advocate, they can file the taxpayer advocate is an IRS employee or team of employees who helps people deal with the IRS when they can't get anything. You can deal with the manager of these people. So everybody has a manager. So sometimes even on the 800 number, I'd like to talk to your manager.
And you mentioned that earlier to me.
And
they have more discretion perhaps than the agent?
Oh, yeah, absolutely. And they always tell you the manager is going to say the same thing as I'm saying. And half the time they do, but half the time they don't. And on the 800 number, you have to get a manager callback. It's not you can get one on the phone. On the local people, you say, hey, I'd like to talk to your manager. What's his name? What's his phone number? You can call him up directly.
And what we've discussed so far doesn't pertain to appeals. This is all at the primary level, is that correct?
This is all at the primary level. We haven't even touched appeals yet.
Okay, I know that will be for a separate topic, but at what point do you appeal?
Well, you appeal when you're stuck. So if the IRS employee says, I don't accept that installment agreement, and I'm going to start garnishing your wages, levying your bank account, seizing your property, you file for appeal. You file either a Form 12-153, requesting a collection due process hearing, or you file a CAP appeal, it's a collection appeal process, for saying that you just disagree with the decision being made. So
is that in a tax court, or is that
No, this is with the Office of Appeals within the IRS, and the collection due process hearings are really great. And this is when you get that notice of intent and your right to a hearing. You've got up to a year to request what is called an equivalency hearing, and there you sit with an IRS, or maybe over the phone with an IRS employee, and they can consider all collection alternatives. Whereas the CAP appeal is more narrow, and the CAP appeal is more readily available because it's available any time in the process, where you say, I disagree with that assessment. I disagree with that decline of my request for an installment agreement. I disagree with, and these are all collection appeal kinds of things.
And the assessment is the amount that they claim that you owe.
Well, the assessment is, when we're dealing with collections, the assessment is set.
It's already been determined.
So if you have a question with assessment, you have to go to the other side. You have to go to the audit side. But
Gotcha.
if you're dealing with, once the tax is there, and here's what happens, people say, but I don't owe that tax. I say, good. Let's get a deal with, let's say they owe $20,000. Let's get into a low-level installment agreement for a few months. Stop the gun from being against your head. Go do that. You can get a streamlined installment agreement, no financial disclosure, no liens. Do that, and now we'll go to the other side of the IRS and we'll try to claim a refund or have them do a redetermination of the assessment.
Based upon an audit of the returns that have been filed?
A re-audit of the returns, a re-examination. But they're two different sides. And
Gotcha.
you can't ask the collection side to deal with the audit side.
That's interesting. So I want the audience to understand that there are two sides. We're talking about the collection side.
We're dealing about the collection side today.
You made a very interesting observation early on in our preliminary discussions about private debt collection services and also some implementation of passport revocations and non-renewals. Let's finish up and focus on that part of our discussion.
Well, the private collection agencies, Congress a few years ago told the IRS, we want you to hire private collection agencies. I mean, really, it was, in my opinion, a very short-sighted move by Congress. Instead of giving IRS a budget where they can collect usually $7 on each employee dollar, all right? They said, go hire private collection agencies and give them $1 every 4 you collect. I mean, the ratios don't make sense. So these private collection agencies actually get 25% of what they collect, and they have no teeth. If they call you, the IRS is going to send you a letter saying this private collection agency is going to come to you. The collection agency is going to send you a letter. So if you don't get letters, if somebody just calls you on the phone, there are a lot of scams going on.
Exactly.
Says we're about to arrest you, okay? Give us a green dot card. That's a scam. IRS doesn't do that. IRS will never call you saying, we're going to come to arrest you. If they're going to come to arrest you, they're going to show up at 6 in the morning, they're going to arrest you for tax fraud, for lying on your tax return. You're not going to get arrested for owing money to the IRS.
And that's with the federal marshal coming with them at that point.
At that point.
So to make it very clear, people should ignore these telephone calls. They're scam calls.
They're scam calls. But after you get these letters, you may get private collection calls. You're saying, I'm with Pioneer, one of the 4 entities. They'll tell you, we sent you a letter on such and such a date. They'll be able to look at the letter. The IRS sent them a parallel letter. And those are legitimate calls. However, they have no teeth. They are toothless tigers. The private collection agencies can't do a thing. They can't levy, they can't lien, and you have a right to write to them and say, I want my case brought to the IRS. Or you just ignore them because there's nothing they can do. They will be there and say, well, can you pay today and how much you can pay? The taxpayer advocate is very unhappy with this program because 43% of the people who are actually paying in to private as a result of private collectors, these are people who can't afford. They would normally be currently not collectible. They're either underwater on their expenses or they're below 250% of the poverty level, which is an area where they don't go and collect.
And so the IRS would actually, in effect, release them from liability, at least at that point, while these private collection agencies are requiring these people.
Right. They have these are old debts that the IRS says, we can't collect them, you go try. Whatever you get is great.
I see. So there's a lot of tools available.
A lot of tools.
I think that people, in order to get the best offer and compromise, really should seek the advice of a professional such as yourself or people similarly situated. Just one last thing.
Yes.
There are a lot of people that claim to be able to negotiate with the IRS. What CVs, curricula vitae, if you will, should somebody look at, a consumer look at, to see if that is a legitimate source to seek resolution before the IRS?
Some of those tax resolution companies are really helpful, but they're mostly marketing organizations. They spend more on marketing than trying to resolve the claims. So you really need to look at who's actually going to be helping you. Not the salesman who's saying, hey, sign on the dotted line, but who is the individual that you're going to be dealing with. And if you can't have a 1-hour consultation and get some answers, all right, then forget about it.
Okay. And Martin, thank you so much for a very, very informative session.
It's been a pleasure.
I look forward to it again.
Thank you.
Thank you.